I'm actually very bullish.
Mm.
Now, the recovery from a bear market either comes two ways, either kind of it comes up, corrects, and then eventually goes, or it comes sharper. It depends on central bank action, liquidity, that kind of stuff. But if I look forward, I'm very bullish because we've just gone through the rate cycle, so that's out of the way. So we've got the downside rate cycle. It stick somewhere in the middle, which I don't think they will, but let's say the consensus is right. It's the rate of change that matters. The rate of change comes down first, then sticks. So that's good for risk assets.
Raoul, a former Goldman Sachs executive and macroeconomic expert, has shared some insight into his outlook for 2023 as he declared that he is actually bullish, even though he believed that a recession is coming. In a new interview in the Real Vision YouTube channel, Raoul shared a lot of insight into the economy, including some analysis on Tesla and Elon Musk investments. The question in everyone's mouth is, will there be a recession in 2023? The Fed's efforts to slow inflation seem to be working, at least a little bit. The labor market seems to be cooling down, putting less pressure on wages, while housing prices and new construction have both declined. Unfortunately, this slowdown in economic activity will likely come with a cost. According to Bloomberg's December 2022 survey of economists, there is a 70% chance of a recession in 2023. A recession may be necessary to tame inflation, but research shows the harms of recessions are not distributed equally. In some cities, it may be a decade or more before their economies get back on track. Recessions often take everyone by surprise. There's a very good chance the next one will not. Economists have been forecasting a recession for months now, and most see it starting early this year. Whether it's deep or shallow, long or short is up for debate, but the idea that the economy is going into a period of contraction is pretty much the consensus view among economists. As we listen to Raoul, we want to use this opportunity to thank all our viewers and subscribers for continuing to watch our videos. We love and appreciate you a lot. Please don't forget to smash the like button and subscribe to the channel if you are yet to do so.
I've been talking about this a lot, the exponential age technologies. We were talking about Tesla, but, anybody who's been paying attention has seen what happened to AI. It went from me interviewing Emad to say, oh my God, this is coming, to ChatGPT, to everyone thinking, oh shit, we're out of a job within 3 weeks. I mean, that ChatGPT went from 0 to 1 million users in 4 days. We've never seen anything like it. And it keeps crashing. There's so many users on it. So that's the technology, and we've got tons of these coming. The energy situation that you've been following so closely, the nightmare in Europe didn't pass in the end. It's, we saw what was bad, but, the Peter Zeihan's of the world and others were like, the Europeans are going to be having to be chipping frozen corpses from the streets. That doesn't look like that's happened. Nobody's run out of energy. Yes, there's been some rationing and stuff like that, but it seems to be contained. So also investors were so negative that I've got charts going back to the 1970s, the AAII investor survey, investor intelligence survey. It was the most negative since 1970 or something crazy. So usually when all of those things happen and we've got liquidity returning, markets are pretty positive. So I love this series because I think everybody's looking that way, and that usually means the opportunities to look the other. Now, but I'm hearing more of this kind of mild recession, soft landing calls from people, and I don't know really yet. I don't really see that. I see short and sharp, and we'll talk about that later in the second half. But I don't really see the mild element. Maybe it's to do with, if we go back to 1980, the Volcker one, right? Everyone talks about that as like this terrifying recession. It was actually a really mild one. And the S&P went down 28%. And that was it. It was kind of over and done with. So maybe there's something to do with nominal versus real. That means that prices remain, demand remains higher because of nominal. Yeah, but a lot of the direction is that the inflation weight is less, and therefore the rate of change of interest rate increases. The Fed are making it pretty clear they're probably going to go to 25. So it's, as you know, in global macro, it's the rate of change that matters more than anything else, not the absolutes. So if the rate of change changes, all of these beach balls start popping out of the water that have been held down by the heavy weight of interest rate rises and that rate of change. That's all gone. So suddenly, emerging markets go up, gold goes up, crypto goes up, equities go up, That whole story. I don't know what the BOJ is doing. I've kind of lost track of them. I almost kind of, I know it's a bad thing to say, ignore it because people over focus on Japan. And in the end, it's still pretty contained. It's not like they're going to let rates go to 2%. So, and are they going to, I was having this conversation with Julian Brigden earlier on the Insider Talks, are they going to let it all go and just give up yield curve control and walk away? I mean, no, they've just widened the band. Why would they suddenly decide, oh, you know what, we're just going to let interest rates run wild in Japan now and completely destroy everything? So, but interesting market overall. I mean, it's been a very risk-on week, very risk-on.
What do you make of this price cut from Tesla? Is it something worth watching?
So Tesla doesn't have its own dealer network. So really, to manage inventory, they can't ram it into the dealers. So what the other car companies do is give them cheap loans and ram the inventory into the dealers and let them deal with it. So what's happening here is they have to deal with their inventory. So I think it's the right thing to do because, the price of secondhand Teslas has been falling as all secondhand cars have. And so to stimulate demand, if they're able to do so directly, why not do it? And maybe they gain market share from it. But it proves the point, and it's the point that even Elon Musk was making, is the inflation picture turned a while ago. I mean, I remember him in the summer saying most of the basket of stuff we're buying is down 50% from the high. And it was like, no, it's not, But so I think what we're seeing from this is, if you think of two businesses of Elon Musk, one is Twitter, one is Tesla. What has he done at Twitter? Laid off tons of staff. And what has he done at Tesla? Cut prices. That's a recession for you, right? That's exactly what recessions are all about. That's exactly what the Fed want to see. They want to see prices come lower. They want to see a rise in or a lowering in wage demand. So, it's kind of exactly as the framework that you and I have been looking at for a while, which is, recession's coming. And I've lost count of how many, particularly tech companies, have done this now. I mean, it's just endless. I mean, everybody's done at least 1 or 2 rounds or 3 rounds of cutting headcount costs. And prices generally, we've seen discounting. And remember, I think even you and I talked about this. There was a massive rebuild in inventories, excess inventories that were carried into the end of last year. And you kind of knew that after Christmas, anything they didn't sell was going to have to go out the door. And so I think we will see this everywhere, where we see some massive discounting to clear inventories. And again, classic part of a recession. Inventory liquidation is what recessions are all about. So, I think we'll see a rapid inventory liquidation in the first quarter. I know some people absolutely hate Elon Musk. I just observed the whole thing, and a lot of people are like, he doesn't know what he's doing. I went on to a 2-hour Twitter Spaces of him with a bunch of engineers about the Twitter tech stack. I mean, the guy knows it inside out. His tweets are kind of like a snapshot of his monkey mind. Actually hear him talking. He talks in extraordinary detail about stuff that, is beyond my understanding. And I then went through the rabbit hole of listening to long form Elon Musk interviews to say, okay, what is this man really about outside of the Twitter noise? And I came away, I was surprised. When you hear him talking about artificial intelligence, self-driving cars, rocket engineering, all these things. I mean, his knowledge is not superficial, put it that way. I mean, extraordinary. So in the end, I'm actually more of a buyer of Tesla than a bear. And, I'm biased. I mean, I've got a Tesla Model X Plaid, and it's the best car I've ever had. It's an extraordinary piece of engineering. Yeah. And so if I could buy secondhand Teslas right now, I'd be buying them with both fists.
Shares of Tesla have plummeted since the market peak and a bear market began. The electric vehicle, EV, stock is down a resounding 74% since that day on January 3, 2022, according to data provided by S&P Global Market Intelligence. That could mean now is the time for investors to jump in after thinking they missed out on this former high flyer. The question is, what will it take for the stock to recover in 2023? The bear market also came as Tesla faces increasing competition, global economic slowdowns impacting demand, and disruptions to its Chinese factory. Investors also struggled to balance stock sales by CEO Elon Musk and his preoccupation with running Twitter. Tesla stock had turned positive for the year at one point on Monday, up about 20% from Friday's 52-week low. That's a wow. There isn't much fundamental research to point to as a reason for the rally. Wall Street is still concerned with fallen prices and demand for the entire car industry. Whatever the reason, the rally is substantial. Tesla stock was the best performer in the S&P 500 and Nasdaq 100 on Monday, according to Dow Jones market data. The recent rally doesn't answer any questions investors have about the economy, competition, or new vehicles coming from Tesla. Investors will hear from Tesla on January 25 when the company reports its fourth quarter numbers and again on March 1 when it hosts an investor day. What do you make of Raoul Pal interview? Also, please let us know the topics you would like us to cover in future videos in the comment section below. Thanks for watching.